Hey, good evening from New Hampshire. We've got an exciting conversation to have today. I want to share some information with you. And with us today is Kevin Shangraw. Hey, Kevin, how are you?
Very good, Keith. Thank you for having me on.
Awesome. You are most welcome. So, Kevin, I'm going to go to the other slide here because I want to start there. So, Kevin, a couple of weeks ago, I was just kind of listening in on a conversation you were having. And you had mentioned the 203K Rehab loan,
Yes.
and you shared with me some information about that particular loan product that I knew nothing about. And so I wanted to make sure we could have a conversation about it. And here are some of the things that I want to talk about today. Does everything there line up with stuff you're
Yeah.
ready to talk about?
Outstanding. Yep.
Awesome. Perfect. So before we get into that, though, Kevin, I'd like to give everybody an opportunity just to learn a little bit about you, who you work for. So
Sure.
tell us a little bit about Loan Depot and your role as a loan consultant.
Great. I've been with the firm Loan Depot now for about 3 years. Loan Depot, they are very tech savvy. They're very advanced on the technology side, which is what I really like. A lot of the mortgage process has been streamlined with e-sign, and they are cutting edge in getting that done. Some stuff still has to be hard inked, but for the most part, we can digitally verify assets, digitally verify pay stubs, so that a lot of people don't even get pay stubs anymore or bank statements. Everything's online, and so asking someone to download a pay stub or a bank statement can sometimes cause a difficult thing. So that's where Loan Depot really is. And my job is to basically educate. I feel my job is to educate people because they are probably going to make the largest financial decision in their lives when they purchase a home or refinance. It's probably the largest financial transaction that they make. So I like to make sure that my clients are well aware of the pros and cons of every loan product, like the 203K. Um, there's pluses and minuses to everything.
Can you talk a little bit about Loan Depot? Is it a large organization, a small organization?
Yeah, it's a nationwide. We are licensed in all 50 states. I'm not personally licensed in all 50 states. I'm only Maine, New Hampshire, Vermont, Massachusetts, and I do have Florida. A lot of people in New England that are loan officers have Florida licenses because of the snowbirds. It's just there. I don't market it, but it's there to benefit any people living up here. But because we are nationwide, I do have access to people that are licensed anywhere. And so it allows me to vet loan officers in Nevada or Washington State or California. I know a lot of loan officers around New England area that have random states because they have family or friends, or maybe they're from out there. So it is nice being part of a larger organization. Economies of scale is helpful.
So before we get into the details, tell us a little bit about yourself. How did you come to become a loan consultant or whatever you called yourself back in the day? How did that happen?
Mortgage loan officer.
Right.
So I started way back in 1998. I am an old soul. I was actually invited by a friend who said, "Come work for me," and I didn't even know that mortgage had a T in it. I didn't know how to spell it. So didn't own a home, but he taught me A to Z, and I worked with him for probably about 10 years until I started deploying for the military, and I took a little bit of time away when I was in the Middle East for most of my 30s. And after retiring from the military in 2012, I got back into lending and went to a small bank at first, but I was referred from my accountant to my current boss, and he introduced me to Loan Depot, and best decision I've ever made. It's
Awesome.
just great. Streamlining is just amazing.
So can you, before we get into the nuts and bolts, uh, why do you feel so confident that you can speak to this particular product that's available to people who are shopping for homes that might not be an easy slam dunk from a mortgage perspective? What do you bring to the table? What kind of background do you have that enables you
Well,
to do that?
I've done a bunch of them. The FHA 203K program hasn't really changed much in decades. FHA has loan limits for, it's based on the county. Anywhere in the country, there's a loan limit, and so those have increased, just like the Fannie Mae and Freddie Mac conforming loan limits. FHA has its own loan limits, and as those have gone up, it's opened up more possibilities. And New England is generally, we're an older part of the country. We're the earliest part that was settled. So most likely, you don't have any 300-year-old houses or 200. It's not
Right.
uncommon to find a house from 1850 here that
That's right.
needs work, and they're
That's right.
great houses. It's an awesome historical part of it. And you just don't have that in Nevada or California, or, I just don't think you do.
Right. So real quick, tell us a little bit about your family, maybe in 60 seconds, kind of what that
I
looks like.
am married. I live in Nottingham, New Hampshire, and I have a beautiful wife who is a nurse at the Elliott Hospital in Manchester. And I have two boys. One just celebrated his 8th birthday, Grayson, and then I have Gavin, who is 5. And they're both starting school this year. I finally have Gavin in, so one stop in the morning instead of daycare. I can just go to the bus stop and put them both on the bus.
There you go. Perfect. All right. Well, let's go ahead and dig into some of what we want to talk about today. So, first, within the framework of the FHA 203K, talk a little bit about kind of how this product came to be.
Sure. So the 203K, that number is nothing special. It doesn't mean 203,000. A lot of people think that. The standard the standard FHA loan is called the 203B. It's just the code that the Federal Housing Authority uses as the loan program. The 203B is basically a loan to get in first-time home buyers, or you can have owned a home. You just can't have two FHA loans at the same time, although there's are exceptions. Um, but the house has to be safe, sound, and sanitary. So the 203K program came up with a way to allow people to get in with the same requirements of an FHA loan, but the house didn't have those three attributes. They weren't safe, sound, or sanitary. And if the property doesn't meet the minimum FHA requirements, then the house isn't approved and you cannot use the loan program. So the Federal Housing Authority understood that, hey, there's houses that just need a little bit of work, or they maybe need major work, but they are for good borrowers. And so it was basically a way to purchase and renovate with one loan.
So, is there like a home inspection process that goes along with this kind of analysis that
Yeah, an FHA, the way that you'll figure out, I mean, there's some houses, if you look, the real estate agents will even say, which is, I love this, when they put on the listing, cash only or will not go FHA. That's completely misleading, because any house can go FHA, because if it doesn't meet the program requirements as is, you can go FHA. It just would have to be a renovation loan, the 203K. It's probably accurate that it won't go for the standard 203B, because let's say it's missing a staircase to the basement. Clearly that's a safety issue. So what happens is an FHA appraiser would go in and say, this house is worth X amount, subject to, and then there's the list of issues. Subject to the roof being repaired, subject to stairs, being put into the basement, subject to the septic being replaced. There's value. And so the appraiser can say, yeah, if this house was up to par, right, it would be worth 500,000. And so once you have an appraisal that goes from as is, which is what you want to see, an appraiser says, yes, this house meets the value as is. If it says subject to with a laundry list of items, that's where we can simply say, well, let's just flip it into a renovation loan. And then
so
and then at that point, you will get a HUD consultant, housing urban development consultant, who will come in and make sure that everything is being identified that needs to be repaired to make the house safe, sound, and sanitary.
so let's just say that I take a look at a house. I'm very interested in buying it, and structurally, no big issues, but maybe the kitchen needs to be redone, or
Yep.
I want to redo it. Do you have that kind of latitude with this
Yeah.
product?
I actually have the list up here because it's pretty lengthy. You can basically do almost anything. There's a limited 203K repair renovation loan, and that's where it's nothing structural, and the total cost of repairs has to be under 35,000. You could easily, let's say, I often hear on listing, beautiful home, but it's dated kitchen, or my grandmother had pink tiles in her bathroom. That's a dated bathroom, right? Someone could buy that house and say, I love it, but I want to repair I want to renovate the bathroom and update it. And after I close, I don't have $10,000 to repair it. Well, that's where you can actually get it done. Have the monies set aside. So after you close, the money is already there for you to do that and make it that house that you wanted it to be, because it was 90% there and you wanted the last 10%.
In that situation, can I actually be living in the house while those repairs are happening?
Yep, absolutely. Yeah, and ideally you want to be able to, with a standard 203K where it's more than 35,000 and possibly there's structural. I mean, if you have to put in a main beam, or it's highly unlikely that you're going to be able to live there. I mean, if they're going to be gutting it that much to put in the supporting
So
beam.
can I stop you on that? So hypothetically, there's no stairs to the basement, and there needs to be stairs. With
Yep.
this loan product, is it likely that I could live in the house while those stairs are being added, or would that
Yeah.
have to be done before I move in?
No, everything's done after. Everything's
Everything's
done after. Now, on a limited, you do have to move in immediately,
okay.
right? And I think you could get away with moving into a house that you just don't use the stair. You don't go into the basement. Where if it's a regular standard 203K program, and if you are doing major structural changes, you have 6 months to finish the repairs, and so you can actually roll in 6 months worth of payments, because FHA understands if you're paying $2,500 a month in rent, and now you're taking on a mortgage for $3,100, how can you float both of them? Because you still need a place to live if you're having a major structural beam replaced in your home that you just purchased. And so what they'll allow you to do is roll up to 6 months. And that's why you need to
Can I
have
stop you right there? I really don't know what that means when you say roll in.
So let's say let's just make it's $3,000 is your total mortgage payment.
Okay.
Okay. And 6 months, that's $18,000, right?
Mm-hmm.
So you could actually, and you needed $100,000 in repairs.
Okay.
You actually can get $118,000.
So at closing, you can get
They're going to basically take every month. They're going to take $3,000 out of your renovation funds to pay the mortgage payment.
Oh, okay.
It's not advice. I mean, ideally you don't want to do that, right? Because you're basically paying, you're rolling in payments that you're borrowing Peter to pay Paul. But if you have no choice, because you're saying my rent's $2,500, my mortgage now is $3,000, I need to have $5,500 a month, and I can't afford it. That's just one way, to get that done.
So is this product only available for single family, or are there other options with this?
No, you can do up to 1 to 4 unit with FHA.
Oh, really?
Yeah.
Okay, so if I was looking at a 4 unit that was somewhat distressed,
as long as it's owner occupied,
okay,
you need
so
to live
talk
in it.
a little bit about that. So hypothetically, I find a 4 unit. It's something that I want to consider as an investment property. Can you just kind of walk us through that a little bit?
So
What that
you
looks like?
you don't want to call it an investment property because it's technically going to be owner occupied, right?
Okay.
So it's an owner occupied where you can add rent to your qualifying. So you're allowed to use 75% of the rents to your income to qualify. Because generally, the reality is a 4 units.
Walk through that a little bit.
So if you make $5,000 a month, $60,000 a year, I mean, I would argue that doesn't really qualify you for much these days, because on $5,000 a month, I see more average mortgage payments are between $3,000 and $3,500. What do you have left to live on if you make $60,000?
Right.
But what if you were buying a 4 unit and each rent was $2,500? That's what, $7,500, right? And you take $7,500, take 75% of it. You add another $5,625 to your income. So now you're making $10,625 to qualify for a 4 unit.
So even before if there's renters in there, even before I buy it, I can actually take the renting history and the revenue associated with that.
Yeah, there's
and kind of
leases.
add it to like my income.
Correct.
And then that will maybe enhance my ability to qualify.
Oh yeah, absolutely. Yeah,
Okay.
absolutely. And there's always quirkiness. Like let's say the seller was a married couple and one of their parents lived in a unit, and they basically lived for free. They didn't pay any rent. I can actually get the appraiser to say, well, market rent would be $2,500. So although the current tenant pays $0, I can make an argument to underwriting saying, hey, listen, I know the rent's $0, but that's, when they move in, or when they when these buyers purchase this home, that unit is going to be vacated. We're going to have market rents, and the appraiser will say, in this area, market rents are 2,500 or 3,000 or 2,000, whatever it is. So,
So I know that you're licensed in New Hampshire. Where else are you licensed?
Maine, Massachusetts, Vermont, and Florida.
Now, did you said you've actually closed a couple of these 203 loans, right?
Yeah, 203K. Yep.
Could you maybe share the circumstances with one that comes to mind? What was the situation with maybe the buyer and the house? What did it need? Just talk a little bit about that.
Yeah, it was a while ago. It was probably before, it was well before COVID, and
Okay.
where the massive burst of appraised values have gone up. And that is promoting somewhat of an issue um, because of the values. But generally, it was a house that needed some repairs. And, they wanted to buy the house, but it needed, I think it needed an extra room. And so they did an addition off the back. And that brings up another point, Keith, that I wanted to make sure that I let everyone know, is that there's a lot of people that are outgrowing their home. And so they say, geez, we have a 2-bedroom, we have a second child on the way, we really need a 3-bedroom. And they're struggling to find one. Well, you can do a refinance 203K and basically make an addition onto the home to add maybe a room, maybe a garage with a room above it.
Okay,
you
so
can
now
make,
you're blowing my mind because
well,
that's me. That's me. I've got some adult kids that have moved
yeah,
back. We need a little bit of space. My house is in great shape. It's not a rehab kind of thing, but I hadn't even thought of that as an
yeah.
option. Wow.
And
So
really,
that's a nice complement to the ADU conversation.
yeah, absolutely. And I know a lot of towns, because of the shortage of housing, especially in New England, that the towns are becoming a lot more open to 80, um, what is it called? ADU, the
Additional dwelling unit.
accessory
Accessory.
dwelling unit,
Thank you. Yep.
accessory dwelling unit. They're becoming a lot more lenient. Whereas 10 years ago, I might not have been able to do a, a, um, a separate garage with a room above it, like an apartment above it. They may not have allowed that in the towns, but a lot of towns are becoming more open to that because they know that there's a housing crunch.
Right.
Like my mom lives in a 3-bedroom colonial in Maine. She lives
Mm,
alone. I've
mm.
told her, like, in some ways, you earned that right, but in some ways you are denying a family a house because you have a 3-bedroom and you really don't need it. You know, so
So let's talk a little bit about the administration of the loan.
so the way the loan, 30,000 foot view, the way the loan works is, let's just take a purchase for simplicity. You take a house and you take the acquisition cost, right? So let's just make up let's just say it's a little dilapidated and needs some work. So it's $300,000,
Okay.
and you need $100,000 to make repairs.
Mm-hmm.
So that's 400,000. And there's some idiosyncrasies, like there's always like 10 to 15% cushion. So you technically are going to set aside 110 to $115,000. But the main goal is it has to appraise for more than at or more than the cost to acquire and renovate.
Okay. So go into just a little bit of math on that.
Sure. So let's just forget about the cushion, the excess 10%, 15%. Let's just say you're buying it for 300, you need $100,000 to repair it. It needs to be worth $400,000 or more,
Okay.
right? Because no bank is going to let you put $100,000 into the home, have it be worth 325. Right?
Okay.
Why would you do that? You owe 400 and the house is 325. Why, if you walk away from it, you didn't lose anything.
Right.
Ideally, and the whole point of this is, I feel like the point that I want to stress is, you find the house that's 75 to 90% right, and we can help you get it to be 100% right. It's hard to find the perfect house. A lot of people say, I want to live in this town, but I can't find a house that can house my family. Well, can you
Mm.
find one that can house 80% of your family? And we'll build it, we'll renovate it to make it, be what it needs to be. Now, there are some FHA is kind of interesting because there is the ability to go up to 110% of the appraised value. So if you are, so on that, let's just do this quick math again. Let's say you buy a house for 300,000.
Mm-hmm.
It needs $100,000 to renovate.
Mm-hmm.
but it only appraises for 390.
Okay.
So now I'm going to contradict what I just said, which is, well, now it's going to cost me 400, but it's only worth 390. Well,
Right.
FHA lets you go to the acquisition costs and renovation, or 110% of the after improved value.
Hmm.
So it's the lesser of the two. Well, if it cost 300 to buy it and 100 to renovate it, that's 400, or 110% of 390. So if I take 390,000 times it by 110%, so it has to the it's going to be either 429 or 400. So therefore those people are all set. Even
Okay.
though it didn't appraise, FHA will still let you do it because it has to be the only way it would never work is if you did 110% didn't exceed, you know, the after improved value. But generally there's a 10% cushion that because if you add a kitchen to a house, it already had a kitchen. So what value are you adding to it? You know, it's still going to be compared to the same homes that it was before you had an older kitchen or a newer kitchen. It just may say, yeah, the kitchen's a little outdated, but it has a kitchen. But if you have a 2-bedroom house and after you improve it, you have a 3-bedroom house, well, now you're going to compare it to 3-bedroom homes. And if they're going for 600,000 in our area versus
Oh, okay.
400,000,
Okay.
right? I mean, people say like, "Hey, it has a brand new roof." I mean, that's great. Did it have a roof before? Yes.
Yes.
Okay. What I mean, besides the fact that it's new, it's still going to basically be compared to the same houses out there. If you have a 2,000 square foot home with 3 bedrooms, a kitchen, and 2 baths, and you renovate a bathroom for $50,000 because you want to have really high end stuff, you still have a 3 bedroom, 2 bath house that's 2,000 square feet. So there are some things to think about that, you can't overbuild, but that's the same with anybody. If you put gold plated fixtures in a mobile home, it's still a mobile home, right? It's not going to be worth if they cost $100,000, it may not add. You're not going to get anything back on it. So you have to be, and that's where the HUD consultant will come in, and the appraiser will come in. The appraiser will say, yeah, it's cool that you want to do all this, but it's still only going to be worth 400,000.
Hmm.
So although you want to spend 550 on it, it's only going to be worth 400,000. And so that's where you have to either go to lower end stuff or change the plan.
Now, are there still? Let's see. Let's go to the slide here. So, are there? So we have a standard and a limited 203. Is that accurate?
Correct.
So, can you talk a little bit about a standard, and then let's talk a little bit about a limited?
Yeah. So the standard is basically more than 35,000 or structural. Okay. So if it's new, I kind of say this: if it's more than 35,000 and it's new, then it's going to be a 203K. If you are repairing or replacing what's already there, it likely will be limited unless you're repair and replacing everything and it exceeds 35,000. So let me read you some things on this list this cheat
Go
sheet that
ahead.
I have.
Go ahead.
Repair, replace roofs or gutters. Repair, replace or upgrade existing HVAC. Repair, replace, upgrade plumbing. Repair, replace flooring. Minor remodeling such as kitchens, which do not involve structural repairs. Painting, exterior, interior. It's all been generally, the house already has those attributes. You're just modernizing them. It already has HVAC, but you need to update it because that could cost, if it needs a furnace, it already has a furnace, right? Where you get into the right standard 203K is when you say, I want to add a bedroom. I want to add a garage. It didn't have that before. So that's likely 99.9% of the time going to be a standard 203K program. Does that make sense?
It does. Yes.
Like you
Absolutely.
can repair, you can install exterior decks or replace, right? But it's always replace what's already there. You replace the septic. Um, you can purchase new appliances, but it's because they already had appliances, right?
Hmm.
Or they should have. Let's say the seller had Viking appliances and they said we're taking them. They don't go with the house. We're taking them. You can certainly buy that house and do a limited and get new appliances installed. The day of closing.
So I was in a house a while back, with my day job, and quite obviously the electrical system was like 1940, 1950.
Yeah.
No, with the old fuses that you had to
Yep.
replace. Could like an electrical system
Yeah.
redo be part of this
Yeah.
equation?
Especially upgrading, like let's say you want to go from 100 to 200 amp.
Hmm.
If 100's just not going to do it because let's be honest, the amount of electronic devices we have today versus what we had when we were children. I have any point there's some sort of 8 to 10 electronic devices plugged into a wall somewhere at any given time. Computers, TVs. We had one TV growing up, probably like you. So now, 100 amp system on a house, 100 amp service on a house may not be enough to power. If you're putting in heat pumps and you want to have AC, they may require an upgrade. So
Yeah,
yeah,
because
absolutely.
I think on that data point, I think on that data point, it takes the initial walkthrough of the home uh, from something which is like, man, this just needs so much work, but we
Yeah.
love the location, we love the school system, but then somebody like you jumps in and says, well, if it's 80% where you need it to be, let's look at this loan option to see
Yep.
if we can't get you to 100%,
Correct.
right?
And I'm not going to sugarcoat it. They are a lot of work for the buyer, and I'll be brutally honest. If I was looking to purchase a home with an 8-year-old and a 5-year-old, I'm not sure I'd want to take on a renovation loan with small kids.
Hmm.
So I do caution people. I'm not saying it can't be done, but you have to be willing to suffer through some stuff. If you think having workmen at your house replacing your septic while you have an infant that you're trying to get to sleep, it may not be conducive to certain lifestyles, right?
Well, because of the state of real estate here in New Hampshire, I think you really have to be well informed, clever, and creative
Yeah.
if you really want to buy, because it's really, really, really hard right now in New Hampshire. And my sense is that most regular home buyers have no idea that this product even exists. And I might even argue that a fair amount of realtors are really not in tune to what it can do.
Correct. And I also think that the one downside that I'm seeing is ever since COVID hit and the cost of supply chain issues that we've spoken about in the past when we've talked about the economy, and the cost of construction has gone up. I mean, I know a neighbor in my neighborhood put a deck on. It was like $31,000.
Mhm.
So a simple deck costing over $30,000. And I think people, because the supply is so limited, we are in a little bit of an imbalance, which makes these a little bit harder to sell or to get people to buy off on. Because if you are overpaying right from the get-go, how are you going to afford? How are you going to renovate it the way you want and have it make appraised value?
Mhm.
Right. I mean, look at some of these houses that we see, that you and I see, that we talk about, where we say we can't believe that they're asking that much, and it still needs $200,000 worth of work.
Yeah. Yeah,
And
I
so
was
they're
at one
they're
just the other day that was kind of in that situation.
yeah.
Mhm.
And I think sellers are, until the supply increases with all the new construction that is happening, we're certainly getting a more months supply of housing. Until that happens, sellers are just kind of still in the driver's seat saying, no, I'm selling this thing for 400, when really 5 years ago, it probably, before the prices of everything getting up. And then the fact that, we know some builders, and what are they telling us? Hey, I'm looking for work next spring.
Yeah.
I'm good for this year. So if
Yep.
you are buying a house right now and you have 6 months to repair it and you can't find a builder, well, there's another obstacle that you have to.
My handyman friend called me the other day, and he said, "Hey, you're not going to believe it, but I just took a $50,000 deposit on a $250,000 barn." So, and he's going to bring in some subject matter expertise, but still, if the handyman's get a $250,000
Yeah,
building project, that speaks volumes to what's going on for the guys who are, doing additions and garages on a regular
absolutely.
basis.
Yeah, absolutely. So, I mean, it's certainly an awesome program. The VA has a renovation product as well, and then there's a regular conventional renovation product. They kind of all fall back to their base loan. The VA renovation loan basically is a VA loan that you can buy and renovate with a VA loan. And the home style renovation, the conventional, is basically the same thing, but as a conventional.
Okay.
So the only difference with FHA is you can get in for as little as 3.5% down.
Oh, okay. So that's what I
So
want to talk a little bit about eligibility and benefits. So let's start off
correct.
with the first one. Talk a little bit
So
about that.
anybody's eligible. You have to. It has to be owner occupied. So back to your question about a 4 unit, you couldn't buy that as quote an investment property. You would have to live there. So in your particular instance, Keith, I would have a hard time if you approached me and said, "Hey, I want to buy this 4 unit. Oh, and I know it has to be owner occupied, so I'm going to live there." Well, I'd have a hard time convincing an underwriter that you're going to move out of a beautiful house, single family that you live in, to live in a 4 unit. Nobody does that. And so the story has to make sense, right? So it has to be owner occupied. You can get as little as 3.5% down, up to a 4 unit, which is what is the biggest attractiveness to FHA. Additionally, it is arguably the most lenient on credit. So you
So
can
can
get in with a lower credit score.
so can I stop you for a second?
Yes.
So my daughter and her husband and their daughter live here at my house,
Yep.
and they are both 29 and grandbabies too. Doesn't matter. They both are kind of entry level white collar people. They work for the largest employer in the state of New Hampshire, and they were at a business get together last night. And my daughter told me this morning that most of the people that she was talking to who are in her age demographic, 95% of them are living at home.
Yeah.
And what's interesting to me about with what you shared is that they could actually consider a rehab loan on a 4 unit, leveraging the rents from the previous renters as a component of their income to qualify for a larger mortgage than they think they can qualify for just by leveraging the rent. So am I
Correct.
off base on that, or is that something
No,
that,
no. And
because I'm in my late 50s, is that something that a 50 or 60 something might want to share with their adult children?
you absolutely, and you have to, I know your son would be a good landlord. You have to be willing to be a landlord. And if you've ever been a landlord, you know that it's not always rose petals and rainbows. If you have a vacancy, then you don't have that rent coming in. If you have a toilet that leaks and it's in a tenant's and they don't tell you about it and it rots the floor, I mean, you have to be willing to be a landlord, right? If you want to go down that route. Now, you'll listen to a lot of talking heads online on television and online that a great way to build wealth is through real estate. That's one way to do it, right? So you can live in a 4 unit for a couple of years, renovate your unit, then move to a different unit, have charge more rent on your unit that you just renovated, work your way through over a couple of years, all 4 units are now renovated, and you're getting healthy rents in 3 of them. Then you go buy your own house, and voila, now you have positive cash flow. Now you
So
only
in
can
the
have you can only have one FHA loan at a time
right,
unless you are moving more than 50 miles away.
okay,
So let's say if you owned let's say you lived in Pennsylvania, Keith, and you bought a house with the FHA loan, just no renovation, just an FHA loan, and you are relocating up here. If you haven't been unable, if you have been unable to sell your house, the likelihood of you having a large down payment is minimal because that I would argue probably came from the sale of your house or would be coming. So FHA says, well, you can buy another house with the FHA 50 miles away and have to only put down 3.5% because most likely you're going to be eventually getting rid of the one in Pennsylvania.
mhm. That's an interesting analogy because I've been tracking what's happening with real estate in Florida and
Yeah.
parts of Texas and Arizona. And so I think what's happening is that for my kids are a perfect example. They both are remote workers. They can
Yep.
work anywhere in the country that they want to work. I think we're a couple months away from the late 20 somethings who are remote workers to start to look at Florida properties that are within their budget, but even in a multifamily, like you were just talking about, uh, pulling a couple of levers, getting at a reasonable price with an FHA mortgage, rehab or not, a property in Florida that now they can live in, rehab. So I'm rambling a little bit, but do you think that shift is kind of coming here
Well, I
within
think,
the
well,
market?
let's talk about New Hampshire. I read, and I think I've shared this to you before, that New Hampshire in 2023 had 22,000 family units net gained for the state. So
Okay.
what that means is there's always people that move out of the state, but overall we had 22,000 family units move into the state. 75% of them were from Massachusetts.
Ooh, okay.
And I think if I was to be a gambling man, or my hypothesis would be that is the phenomenon of telecommuting.
Hmm.
I think people can say, look, I have a $900,000 house outside of Boston. My kids have no yard. I can sell this, buy an $800,000 house, walk away with 100 grand, and my kids have a 2 acre lot.
Hmm.
And I have to go to Boston once a month instead of 5 days a week. So I see the telecommuting thing being a big draw to people being able to be a little bit more flexible in where they live.
Yeah,
You
I
know,
agree. And I don't know if that's changed forever, for the next 10, 15 years, or if it's going to shift back. I think those who are working from home are appreciating the additional convenience and the additional time. I think if they have to go to the office, if they can, once a week, that's actually what we're seeing here with my kids. But they're managing it. It works really well. But my son-in-law actually manages people who work really, really remote and will never go to the office.
right?
So, yeah.
And I want
So,
to touch on one more thing, Keith, too,
yeah, go ahead.
with getting a house and getting in the game. So, if you
Okay.
didn't know, last week the jobs report came out and rates turned positive for us, meaning they came down almost about a 0.5% to a little bit more than 0.5%.
Okay.
I locked in two people that are going to capture that dip with a refinance.
Nice.
So the only people that can't capture a reduction in rate are the ones that don't have a house to refi.
Hmm.
So
So you talk about that a lot. So, and also we didn't touch on it, but you've got an MBA, so you don't necessarily. So you look at the numbers, you look at the logistics with a little bit more educated kind of perspective. So, talk a little bit about getting in the game, even if it's not at the interest rate you want.
correct.
Most likely it's going to be eventually at the interest rate you want, but along the way there might be some things to do. So talk about that.
So you have a very low rate. You refinanced during COVID, correct?
No, I did not. No,
Okay.
my rate was very. I didn't even. No.
All right. Well, a lot of people did, and a lot of people now are bragging about being in the twos, high twos, low threes. But I tell people they never had that rate from the get go. So the only reason that those people were able to capture a 3.25% rate or a 2.99% rate is they had a mortgage to refinance.
Hmm.
You can't wait to buy a house until the rate is low, because everyone else is going to try to buy one too. Having higher interest rates, if you still qualify for it, is the best time to buy, because most likely every 0.5% reduction in the rate, like another 10 million people become eligible to purchase.
Oh,
Your competition is going to increase.
well,
It's
stop.
something like
Say that. Say that again, even if it's
it,
not 100% accurate.
it's something like every 0.5% reduction in the interest rate, it adds 10 million eligible borrowers to the market. Like,
Gosh.
or it's something like that. So basically, my point to people is I know you want a low rate, but you're going to compete against everybody, and all you're going to do is overpay. Everyone's going to outbid each other, and then you're going to end up getting a house for probably paying too much. And again, the two loans that I locked this weekend, because they called me back and I got a hold of them, they are dropping like 0.75%, and they didn't compete with anybody to get that rate because they already own the house.
Yeah.
There's
Right.
no competition when you refinance. And so
Well,
my takeaway is, if you can't refinance and get a low rate if you're not playing the game. You can't score a goal if you're not on the ice.
so then, if for those people that are watching this, then I think, and correct me if I'm wrong, find a house that's 75% where you'd like it to be. Have a conversation to see if a 203 loan doesn't help you get over the finish line on where
Right.
you want to be. Go with the interest rate that's available now, or whenever now is. Lock that real estate in, and then when interest rates come down, 75 basis points,
Well,
Marty?
yeah. I mean, yes. If you
When
can
interest
drop,
rates come down a point, have the conversation about refinancing. And
correct.
there's really no limit on how many times you can refinance, right?
No, there isn't, but there's sometimes a cost associated to it, so you don't want to keep you know,
Right.
and again,
So
time creates wealth. So if you're not getting a house till you're 50 and you're getting a 30-year mortgage, that's not a
yeah,
comfortable feeling. It's saying, geez, I'm going to be 80, you know,
yeah.
when get a house at 30 and at 60, you may have it paid off. But with all likelihood, after 5 or 6 years, you might refinance to a 15-year and then pay that sucker off in, you know, 21, 22 years. And now you have more money to invest and build wealth.
Yeah, I agree with that 100%. My wife and I were having that conversation a while back, that real estate is just kind of one of those wealth levers that you can pull in your favor if you've done things well. I'm certainly in that position. You're absolutely right with time. It has a big impact. So um, let's see here. Did you want to talk about number six or did we touch on that already?
Um, yeah, the process is it. I mean, I guess generally it's just you find a house and you get a HUD consultant. I mean, you figure out what you want to get done and you get estimates from contractors, which is probably the toughest part. I mean, there's a lot
Right.
of legwork that the buyer has to do. I mean, you, the real estate agent, or myself, I can't go get estimates because I don't know what you want to do to your house, right? If you're going to renovate
Right.
your bathroom, you're the one that needs to go get to Lowe's and pick out the tile and get a quote. You need to go talk to somebody to say, what's a garage door cost, or what's appliances going to cost, but based on what the borrower wants to buy. And then you close and then you start doing the renovation. As far as the requirements, it's really just as long as it meets FHA property guidelines, which becomes a moot point because if if you had a house, let's go back to my example of it had no stairs going to the basement, and you were buying that, Keith, and you said, "Hey, all I want to do is I want to get new appliances." The HUD consultant will say, "Well, that's great, but you also have to do these stairs. You have to have stairs to the basement." So if the program requirements become kind of a non-issue because the HUD consultant or the FHA appraiser is going to tell you what needs to be fixed, not what you want to fix, but what needs to be fixed. You may want to have a bathroom redone and you don't want to do the roof, but the appraiser may say you need to have the roof done. You can still do the bathroom if you want, but the roof does need to be done because it's leaking.
So if you've piqued the interest of a 50 or 60 something that wants to help their adult children, or if we have some early 30s or late 20s who are eager to get into real estate, what kind of questions might they need to be prepared to ask? And in your opinion, who should they start that conversation with?
I I find the ones that do best with these types of rehab programs are someone that knows somebody who's a builder.
Okay.
So, I mean, I'm not a builder, so I might take our friend John. If I was to find a house that I think needs some work, I'd say, "Hey, John, are you available on Saturday to go with me to this open house? I need your expertise to say, run away, Kevin. You're talking 300 grand just to get this livable."
Right.
Or, "Hey, Kevin, this isn't going to take much, you know?" And that's the problem. I think this is what scares people is they don't know what they don't know, right? If your daughter or son were to go in to look at a house, would they have any idea how much it would cost to renovate it? I don't know, maybe.
Right.
So, our friend, anybody that's a builder or an odd jobs guy, they can at least ballpark it, and nothing that you want to hold them their feet to the fire with, but at least someone saying, "Hey, this house needs to be jacked up and a new foundation. This is going to be, I mean, you're talking, I mean, just roughly, I'm looking at 150 grand." Then you might say, "Geez, I'm not sure that this is a project that I want to get involved in." So
Well,
that
we have
that's the one thing that I find that people just don't even consider looking at these homes because I think it's emotionally overwhelming as well.
Well, that's why I wanted to have this conversation. I
Yeah,
wanted other people, and we're in New Hampshire and we understand just how difficult it is. Obviously, this can be done across the country, but my feeling is that if you're in New Hampshire and this this conversation has enlightened you a little bit, I would strongly encourage you reach out to Kevin. And
yeah,
we're going to put up
happy.
your information because Kevin's going to be able to help you walk through the math, so it makes sense to
Right.
you. So when you're going to look at an open house, you have the math in mind, and also Kevin, you're really connected with realtor types in the area, with builder types in the area. And so you can add an extra layer of communication for somebody that might not have a builder or a home improvement person in the
Right.
circle. We can actually connect them specifically. You can connect them with a couple resources in that regard. We don't want to waste people's time. Are you serious? Are you pre-qualified? Those
Right.
kinds of things. But just talk a little bit about that. We've got to wrap up in about 5 minutes. So
Yeah. So, I mean, the first thing is find out what you qualify for, whether it's a
okay.
renovation or not. If you can afford $500,000 of mortgage debt, okay, then that's kind of your number, right? Now, that means you can't go buy a $500,000 house that needs $100,000 worth of work.
Okay, so step one is find out what you qualify for.
Right.
Who's going to help a buyer determine
That
that?
someone like me.
You're going to do that. Okay.
That's what I do. And
Okay.
then they can go house hunting. Then they have a pre-qualification letter, a pre-approval letter rather. Then a real estate agent will give them the time. And then if they struggle to find a house, but they say, geez, we like this one, but it needs work, great. Well, now let's find out how much money it needs to get it up to what you want it to look like. And the cost to purchase and renovate has to be at or below that number that you can afford on paper.
And that's why I think it's important to start with you, quite honestly, because
I agree.
one, do you qualify? What do you qualify for? We're going to get you the pre-letter, the what's it called? Pre-approval letter.
Pre-approval.
You're
Yep,
going to have the
pre-approval letter.
pre-approval, and most realtors aren't really going to talk to you unless you have that anyhow.
Yeah, they don't want to
And
drive. Yeah, exactly. They don't want to show you or spend their weekends taking you around to houses if you haven't shown you have the ability to get financing.
and then I would say go look at the pretty houses, do that, but keeping you in their back pocket, it's like, well, if you come across a house that's in the right location with the right school district, but it needs some work, well, let's come back to Kevin, have that conversation, bring in some subject matter expert people who can actually do the visit with the potential home
Right.
buyer to say, hey, okay, they're selling this for 400. It needs 75. It needs 50. The numbers, let's check with Kevin to see if the numbers work or not.
Correct.
Right? Okay.
In a nutshell, that's basically the steps that I would do if I was out there. And the real estate agents are going to push them to get with me or any lender to get a pre-approval. That's the first step. So the money guy.
The money guy. So, Kevin, I'm throwing up your slide again. Kevin at Loan Depot. There is his credentials. Do I have your email right? Is that the best way to get you?
That is the best way to get me. Yes, sir.
Okay, very good. Well, we're coming up on 50 minutes, so I haven't eaten yet, so I want to get down to the kitchen and get something good. I hope you enjoyed this conversation. I'd like to have one again in the very near term about refinancing. So if you think that you're seeing some favorable momentum within that space,
Absolutely.
let's have a very detailed conversation about refinancing and kind of go over a similar structure and get some
Absolutely.
people informed and enlightened. With that, my
Yes.
friend, I'm going to let you go. Okay.
All right. Have a great evening.
All right. You too. Take care. Bye bye.
Bye.